Thank you very much to the BSC for this opportunity to come and give you guys, Rand Merchant Bank, and specifically my views on what's happening in the rest of the continent, not specifically just Botswana or South Africa. How can we, as industry captains, go into the rest of the continent? And it struck me that the companies that's on the domestic board of the BSE are halfway there going into the rest of the region. So instead of 12 out of 22 companies, let's make it 22 out of 22 companies over the next few years. To start off with where to invest in Africa, it's a document we've been writing. It's the 5th edition. In fact, it's actually ranking the countries according to its attractiveness. We've got a certain methodology that we use. A lot of our clients sometimes agree or disagree with the methodology that we use. It's your decision that you want to make. But because we present and have such a large array of clients, all the way from resources to retailers, we have to make it a very simple and broad methodology to give an idea where the opportunities are lying on the continent. So without further ado, let's see what exactly Rand Merchant Bank looks at when they want to go and invest into Africa. 3 major aspects in our methodology includes the operating environment. Of course, we need to know how easy it is to do business on the continent. We know this is actually a very difficult step in doing business on the continent. Looking at economic growth, a good proxy for return. We look at forecasted growth rates over the next 5 to 10 years. However, unfortunately, it's the most difficult and the most volatile indicator to look at because we all know how growth rates vary year on year in the continent because of commodity prices specifically. And then we look at market size, specifically at purchasing power. How rich are these economies to purchase goods? So for importers and exporters, for retailers specifically, this is a very important aspect to look at. Now, if we combine all 3 of these aspects to see who's the most attractive economies in Africa, we start with the top 10, Tanzania and Kenya. East Africa is definitely going to be the darling of growth in the continent over the next few years, not just because of their diversity compared to the rest of sub-Saharan Africa, but because of the findings of oil and gas. So we will start seeing quite significant investment over the next few years into these 2 economies specifically. Speaking about their diversity, we can actually see what's been happening in the past or the recent few months, that the shillings in both of these countries have not seen such volatility as we've seen in other currencies in sub-Saharan Africa. Their liquidity levels are much stronger than what we've seen in other countries like your Angolas, your Nigerias, that are battling with that commodity price downturn. And of course, we will see growth rates above around 5% in the East African region for 2016 and 2017, and probably even more so, above 7% over the next decade. Looking at your rest of your top 10, 7 and 8, North African countries. Not specifically in my portfolio because it's such a far distance from South Africa, and also we sort of see North Africa as part of the Middle East, but they are still in our top 10 economies. In fact, number 2 and number 3 in the ranking is Egypt and Morocco, which you will see just now. Why are the North African countries in our top 10? They are always in our top 10 for the past 5 years. It's because there are such diversified markets, and we are starting to see significant growth again after the Arab Spring. They have got food, manufacturing, fuels, services, and all of them are almost equal contributors to the overall GDP of North Africa, something that sub-Saharan Africa definitely still has to learn. Number 6, Ethiopia, a very surprising entry into the top 10 over the past few years. A lot of people are thinking, what? It's definitely not what we see on CNN or BBC on this famine-stricken economy. But in fact, Ethiopia has the most arable land in the world. And the government is actually realizing that and investing heavily into the agricultural sector, causing this economy to grow above 7% for the past decade already. And for retailers, what a fantastic area to go into. Demographics of 87 million people, above 50% urbanization levels. However, international retailers are not allowed in Ethiopia. So we're saying it's in our top 10, but we must always remember the regulatory environment is not conducive to certain sectors to go into a country like Ethiopia. And also, unfortunately, a very difficult country to repatriate your dollars out of. But that is a whole different presentation on its own. We look at who's fifth and who's fourth, your West African countries, Ghana and Nigeria. Now, you would say, but currently, these countries are battling significantly. Twin deficits, so current account deficit, fiscal balance, we see the currencies blowing out. Nigeria should be devaluating their currency by now. However, they're keeping it at that very strong artificial level. But in future, these countries are still going to do well. They are pioneers of looking at what's happening in the mining industries, oil industries, and in fact also your services sectors. They both have quite big markets. Definitely Nigeria, we know, is the first largest market in Africa, and Ghana is starting to grow significantly, above $30 billion as its overall purchasing power. And of course, we can see some reforms already over the past 10 years to be able to get investment into the market. Currently, these countries are battling. But what we say with this book or this publication is that we look through the commodity price cycles and we look through political cycles. Don't think we're ignoring those issues. It does reflect in the rankings, but I just want to highlight that it is a long-term view. I've mentioned already Egypt and Morocco. I won't go into too much detail. And please don't think because I am South African that this is why South Africa is ranked number one. I've actually had a lot of comments from international clients saying they think it's because I'm a South African. No, I'm an economist and we look at the true data. If you had to look at exactly that methodology I showed you earlier, South Africa still has one of the best business environments in Africa. Botswana has a better business environment than South Africa, but we are the second largest market in Africa after Nigeria. And those two aspects in the whole of that methodology brought it up to number one. But what I can mention is that over the past 5 years that we've written this book, South Africa's scoring has deteriorated. Definitely from our Eskom problems, power, all the way to our politics, all the way to our consumer not growing anymore, etc. That is why South Africa's scoring is dropping, and countries like Egypt, Morocco are actually narrowing in to that gap. In fact, last year when Nigeria was in second place, Nigeria fell now because of the oil price. Nigeria and South Africa's score was close to 0.1 from one another. So we are highlighting that South Africa is definitely not doing so well. And I won't be surprised that we are not number one anymore when we rewrite this document at the end of the year, because we have a potential downgrade, unfortunately. I think a downgrade is probably going to happen in June, but if it's not happening in June, it is inevitable to happen in December. Our fundamentals aren't strong enough to keep that investment grade at the moment, and that is my biggest concern as a South African and African economist, is that we'll be downgraded. And the problem with a downgrade, so please Botswana, don't ever get to that point. The problem with a downgrade is that it takes 7 odd years to get back to investment grade. So that's the biggest problem for South Africa at the moment. You're asking me, and you're probably looking at me going, where is Botswana in this ranking? And please, again, my disclaimer that I use, look at the methodology we are using. Botswana is 13th, so at least I can say Botswana is in the top 15. However, Botswana's market is much smaller than those that we have seen in the top 10. Your North African countries, Nigeria, South Africa, just trumps, actually giants, the market of Botswana. And remember, that is a key important thing in our methodology, is the market size. Botswana's growth, unfortunately, not as strong as what we've seen in a Nigeria or a Kenya or a Tanzania of above 7%. But at least we know we've got stable growth in Botswana. The business environment is keeping it in that top 15. If it wasn't for your business environment that is so conducive to investment, I think it would have probably dropped out of the top 15 because investment is then not easy to come into your market. So we are still very happy with Botswana. Apologies that it's not in the top 10, but purely just look at the methodology. The rest of the countries to mention here, Countries that often come on the radar now of our clients that are already up in Africa: Cote d'Ivoire, Rwanda. We get your Angola still in there, Zambia, for instance, Mozambique. So these are still very attractive economies to go into. Currently, they are facing some problems. Mozambique dependent on coal prices, Zambia dependent on copper prices. Rwanda at the moment, still a very small economy, but still doing very well from an investment-led perspective. So currently the commodity prices are not doing well for Africa. So I would think Africa is still going to face pain for the next 2 years. But after that, when your commodity prices start increasing again, which is our core view, it won't increase significantly, but it will, we will start seeing these markets coming out again, being able to see those strong growth rates we've seen about 5 years or a decade ago. Now, alternative rankings. What we do here, a lot of our clients are asking us, but what if we find that the operating environment is much more important for us than growth and market size? We've actually catered for that in this publication, and just to highlight, the publication can be available to you guys in soft copy. But looking at alternative rankings, regionalization, what do we mean here by regionalization? Regionalization just means, what if your country is part of a very strong trade agreement? We've got SADC, SACU, the East African Community, etc. Probably the only 3 or 4 very good trade agreements in Africa. West Africa, unfortunately, the trade agreements are still being marred by political issues. We see the East African Community, it's starting to build and it's starting to become so progressive that it's an ideal area to go and invest in and tap into the East African Community trade agreement. So, what if your country was a good part of its regionalization and the trade agreement? Where would the countries be? Mauritius would be number 1. Mauritius is part of COMESA, SADC, SACU, East African they've got easy access to the East African Community. So very nice trading lines between Mauritius and most of the African countries in the sub-Saharan Africa region. Then we start seeing other countries like Zambia coming into the top 10. Botswana is back into the top 10 because of being part of SACU and SADC, Rwanda, etc. Again, look at those North African countries, always in the top 10. So that's according to regionalization. If it had to be according to economic activity, that's when we start seeing the large markets entering. South Africa remaining number 1, just highlighting that we still include your operating environment and include your market size and your growth into these numbers. But I think the most important one to look at is your risk aspect. So how easy is it to do business in these economies? So if you put a bit of a higher weighting to the risk, that's where we start seeing countries like Mauritius, Ghana still doing quite well, Botswana into the top 10. So it's just a great way of showing that the risk is much lower in more your southern African regions and then your North African regions compared to the rest of sub-Saharan Africa. Just to finish off, it might be a few minutes to finish off, but foreign direct investment is probably your key, in my opinion, your key indicator of which markets are attractive. Because that's where the money is going, and that's where you want to go and invest in, where the money is. So looking at foreign direct investment, just to highlight, what is foreign direct investment? What we mean here in the definition for us is physical capital going into projects. It's not portfolio flows, it's not bond market flows, it's physical investment into these economies. So what I've done here is on the left-hand axis, I've put our investment scoring, so we still see South Africa there ranked quite well. And then I've actually plotted it against foreign direct investment coming into Africa over the past 5 years. And we see a strong correlation between our ranking and also where investment is going. But there are naturally anomalies, as you can see, Congo, DRC, Equatorial Guinea, very low ranked in our scoring, but of course gaining a lot of foreign direct investment. We all know it's purely because of the resources. So we still see, unfortunately, that in dollar terms, FDI is still focused on the mining sectors and the oil and gas industries. Now, who's the leaders in finding investment? South Africa is still the largest recipient of foreign direct investment, according to the UN. So we received in 2014, $5.7 billion US. Then we get the Congo, Mozambique, Egypt, and Nigeria. These are the top 5 largest recipients in 2014. And let me just show you the rest of the top 10. Now, I do know that the numbers are going to change significantly from 2014 to 2015. We're still waiting for the data, unfortunately. We know in Africa data is a bit slow. But I suspect that a country like Congo won't be second in line anymore because of the commodity price downturn, for instance. But they'll probably still be in the top 5. I don't think South Africa will be number 1 anymore as the largest recipient because of that fear of a downgrade. The rand not doing very well, etc. Mozambique, I think, will still remain in the top 5 because not just the coal sector, but also oil and gas. But I think we'll start seeing a Tanzania moving into the top 5 because of that oil and gas sector. But what is good to see in Africa is that the investment is not just going to the mining and resources sectors. It's actually going to services sectors. So the capital, yes, dollar terms, it's still going to oil and gas, but project terms, telecommunications received the largest chunk of project investment in 2014. 20% of all FDI projects were in telecoms. Then we get financial services, then we get consumer products, and then we see restaurants and hotels. Only at the bottom of the top 10 list, we see coal, oil and gas. And that's where I see the potential for Africa, is investment in different sectors and not just in resources. And here we've got proof that it is actually happening. Where is it coming from? We all know the US, the UK and China. That's where investment is coming from, and I don't think that is going to change significantly over the next few years, but I do see players, private players from India specifically, starting to move up into the investment arena into Africa. So the US predominantly investing into South Africa, but again, not resources. It's business services, clean tech, chemicals. Let's see where the UK is going. Again, South Africa, the largest recipient, but again, it's in services. And then we didn't draw China here because we know it's into resources, but South Africa is also a large investor into the rest of Africa, for instance. Mauritius is our largest investment destination, and it's into pharmaceuticals, it's into real estate, financial services. Okay, we all do know that Mauritius is a bit of a tax haven, so that is why it's a very good opportunity to go and invest there. But overall, and to finish off before I hand over to my colleague, Africa is growing, but is there really confidence in Africa? And the only other way we can show this, instead of just looking at foreign direct investment, is to where are companies going? So because I'm from a South African bank, we looked at South African corporates going up north. Now, this is an animated slide, but you don't have to worry about the animation. It's highlighting how 800 of RMB's clients, we actually did a survey and we looked at which countries are they active in the rest of the continent. And we saw a very similar pattern as we see with most corporates. Southern Africa is the first areas they go to, Botswana, Namibia, definitely, the first key players in a Pan-African strategy for South African corporates. Then going up into East Africa and West Africa, depending on the type of sector and investment opportunities that there are. But it's just very nice to highlight that each and every single African country is now covered by corporates on our list of clients. So even your Somalias, your Sudans, business is happening on the continent. But who's the biggest players? Not from a dollar perspective. Who's the footprint that is the biggest? Half of these 800 of our clients were retailers and automotive and logistics. So retailers were the winner. What I've just highlighted here, it's some of the countries where RMB, F&B has a presence. I've highlighted what the footprint of each and every one of these sectors are that we've been highlighting. So we can see, for instance, for Botswana, 28% of South African footprint is in retail. 26% is in financial. So we can actually see that the footprint is so diverse of South African companies going into Africa. But the point is, Botswanan companies are doing the same. And it's growing, and that is fantastic to see. I think just to end off, before I hand over, it's to highlight the opportunities are there in Africa. I'm on a panel discussion later this afternoon to discuss why I think Africa still has the potential. Here I'm just showing you what countries we think has the potential. So by all means, please take advantage of looking at our document to get all the information available on African countries and how to invest there, how to mitigate the risk, how easy it is to do business in these environments. The economic activity is there, and the operating environment, yet slowly, is definitely improving. So I urge all you corporates and companies, be the Letsegos, be the Choppies, be the Amaras, go into Africa. The opportunity is there. Even though the continent is currently not doing well, it's a great opportunity to take advantage of that. I will now hand over to Ishad Paruk, so that's our Head of Equity Capital Markets at RMB South Africa. Thank you very much.